Welcome back, everybody. I'm Jeff Barton for the Mortgage Minute here for the Mortgage Voice. You can see the Mortgage Minute almost every day on LinkedIn and Facebook, as well as Instagram and Twitter. We're adding some other individual sites, smaller in scope, but we're out there in the world trying to bring you some information about what's going on in the mortgage market as well as the real estate industry. We have a radio show that we show each and every week. On YouTube as well. Of course, that's a podcast, the Big 8 podcast as well. But the radio show is on 5 stations in 3 different states. So you can drive around in your car, go to Home Depot, wherever you do on Saturday and Sundays, and listen to the stations. We're in Albuquerque, New Mexico. We're up in Las Vegas, Nevada. We're in Southern California, in the Inland Empire, some parts of Los Angeles and Orange counties, as well as up in Tahoe. So thank you very much for listening. Let's get right to it. The interest rates. Let's talk a little bit about interest rates here. Interest rates have improved again today. Now, when we say improve, it's by basis points. So 2-3 basis points either way for the last week or so. We did see rates climb earlier in the week. That had to do with some specific items that went on in the bond market. But today, 2.94 is the 30-year fixed, 2.44 is the 15-year fixed, 2.40 is the FHA loan, 3.30 is the jumbo, and 2.73 is the 5/1 ARM. A couple of points to note: the forbearances are down, as we had talked about earlier in the shows this week, as well as the radio show, which we record on Tuesday for Saturday and Sunday. Unemployment, 10.5 million. That is, of course, down from 22 million. But there is an underemployment, and there are some issues having to do with employment that trying to fix either through some COVID relief package, which is yet to be identified. I think that will square itself out when we finally get an election that is called for Joe Biden, which is the Democratic candidate. He won, and the current president needs to just move along a little bit so that we can get to the important legislation that needs to get done. It either gets done now or it gets done when the new president takes over on the 20th. I think people who are unemployed and people who need to pay their bills need that way before then, but we'll see. And hopefully it will happen, and that certainly will help that unemployment number. The COVID success. Yes, let's talk about that for a second. It appears that virus vaccine will be out by the end of the year. 2 different ones, one from Moderna and one from Pfizer. Both of those vaccines will help in terms of the psychology of people to be able to relax a little bit, although the cases are going up, and it is a big deal economically, and how that affects real estate and the prices overall. Well, a lot of people don't want to sell their houses during COVID. They just don't want anybody in it. We're not building as many houses as we should be building. And unfortunately, and I'm going to read you a quote from the guy's name is Lawrence Yun. He is the chief economist of the California Association of Realtors. Now, granted, this show that you're hearing is really sent to everybody all over the country, but Lawrence Yun is correct when he says, and I quote him, affordability situation will not improve even with low interest rates. The affordability will not improve even with low interest rates. Housing prices are increasing way too fast. And that's Lawrence Yun, Y-U-N. So the demand is really high. And what happens with the demand is fewer and fewer houses are available. So that fuels the demand even further. Complicating that, of course, has been the fact that interest rates have been really low. So you have a huge pool of people who can go out and buy a house. However, with that and the lack of housing out there and the lack of building of housing out there due to the pandemic, you have a compounded effect. Less housing means prices go up. Now, it was offset for a long time by the fact that we had low interest rates. Not anymore. And that's occurring right now in November 2020. The fact that the housing prices are rising really too fast for the low interest rates to really have any effect in a positive nature. So that's what we call inflation, and that's what people worry about when we talk about housing bubbles. So all that being what it is, the median price of U.S. homes, $313,000, up 12%. That's a big number this year, and that's year over year. Anyway, I'm Jeff Barton. Have a terrific weekend. This is Friday, and we'll see you next week.